Hello, precious metal investors, and welcome to Minted Wealth. In today's video, we will be learning how to calculate product premiums on popular Canadian bullion products, as well as learn the definition of what a product premium is, and finally, the different types of factors that affect how a bullion dealer prices their products, or really how they establish the product premium for a specific product. For those of you new to Minted Wealth is a precious metal educational platform founded by seasoned precious metal traders with careers in the precious metal industry. I am the trading manager at one of the largest bullion dealers in North America, generating over $1 billion in annual revenue. On a month-to-month basis, I am buying and selling tens of millions of dollars worth of precious metals, and I'm extremely well versed in the industry. Now, our goals are to provide continuous education to both new and experienced precious metal investors, as well as to become a trusted source for knowledgeable and actionable advice. And then finally, we also have the goal of keeping investors informed on important changes, news, and any significant events that occur in the precious metal industry. As we go through today's video, we will be learning how to confidently calculate product premiums on popular gold, silver, and platinum products, as well as going over the importance of knowing how to calculate product premiums, which ultimately allows us to make better and more informed purchasing decisions. And then lastly, we'll go over the different types of factors that affect bullion premiums and essentially establish how a dealer prices their products. So to start off, let's go over the importance of calculating bullion premiums. So what is a premium? A premium is the price above spot a bullion dealer is charging for a product, whether that's gold, silver, platinum, or palladium. And whether you're a new or experienced precious metal investor, it's important to know how to calculate bullion premiums because it's going to allow you to quickly determine how much a dealer is charging above spot price and really how much spot needs to move upwards before you break even. And then finally, you can use product premiums to compare different types of products. So you could calculate the premium on a quarter ounce gold maple and compare it to a quarter ounce gold Britannia and see which one has a smaller premium. And generally, you want to purchase products that have as low of a premium as possible. And then finally, of course, knowing how to calculate premiums will allow you to find great deals that most investors miss simply because they don't know how to do the math. Now, let's go over factors affecting bullion premiums. So there's three main factors that impact product premiums. And of course, the first one is the minting cost. So this is the cost the mint incurs to manufacture the product. And generally, the higher in design quality, final finish, and intricacy means the higher the premium the wholesaler will be charged to buy from the mint. Additionally, the smaller the product is, generally means the higher the premium it will have. So a 1 ounce gold maple will have a lower premium than a quarter ounce gold maple, and a quarter ounce gold maple will have a lower premium than a 10th ounce gold maple, and so on. Inversely, for silver, a 100 ounce silver bar will generally have a lower premium than a 1 ounce silver round. Because again, the bigger the product is, the easier it is for the mint to produce it, and the smaller the cost they incur. Next on the list, we have the wholesaler cost. So this is the premium charged by the wholesaler that the dealer must pay to buy the product from them. So the higher the cost, of course, the wholesaler charges generally means the higher the premium the dealer will have to charge to their retail clients. And then finally, mintage and allocation. So this is really how readily available the product is for resupply and how many allocations there are throughout the calendar year. So let's take a 1 ounce silver round. The supply for this is generally unlimited, so the premium on it a dealer will charge is quite low. But if we look at, a 1 ounce 2023 lunar year of the dragon silver coin, it's a very well-designed coin. I think the mintage is less than 10,000, which simply means premiums on it are going to be higher, right? If there's not as money available throughout the year, a dealer's going to charge more because as soon as they run out, they won't be able to buy more. Awesome. So that wraps up the presentation. So now that we have a good understanding of, why the product premium is important and the factors that affect the bullion premium, let's go find an online bullion dealer and let's put our skills to the test. So for this video, we're going to be using Silver Gold Bull. I am the trading manager at Silver Gold Bull. So again, I'm very familiar with their website and they have an extremely good reputation. So first off, let's calculate some product premiums. So the math is super simple. And let's pull up a 10-ounce assorted silver bar. So right now they're selling the silver bar at $378.24. What we're going to do, we're going to divide this by 10 because it's 10 ounces, which gives us the price per ounce. When you're doing your math, you always want to, or not always, but it's very easy when you just convert the price to the price per 1 ounce, because all of the spot prices are in 1 ounce. So now that we've done this, we're going to subtract it by spot price, which is $32.15. So we can tell that our product premium on the 10-ounce assorted silver bar is $5.67. Now let's pull up a silver round and let's look at the assorted silver round, and we'll do the exact same math. In this case, this one's super simple because it's just an ounce. So you're going to take the first price, which is $39.66, and you're going to subtract it by spot. So $32.15. So we get $7.51 as the product premium. So what we can see right now is the 10-ounce silver bar was $5.67. The 1-ounce silver round was $7.50. So who has a lower premium? In this case, the 10-ounce assorted silver bar does versus the 1-ounce round. Again, why? Really, the cost for a dealer, and I know this firsthand because I do our purchasing, the cost that a dealer pays to buy the 10-ounce, to buy any 10-ounce silver bar is less than a silver round. So again, if their cost is less on the 10-ounce silver bar, they're generally going to pass that savings on to the customer as well. So this is why they're selling the 10-ounce silver bar at a lower premium. Now, before we move on to gold, let's also pull up the 100-ounce silver bar. So in this case, we're going to take $37.40 and divide it by 100. So we get our price per 1 ounce, and then we're going to subtract it by spot. And then what we can see here is that the premium on this one was $5.25 an ounce. So again, the 10-ounce silver bar is $5.67. The 1-ounce silver round was $7.51. And now our premium on the 100-ounce silver bar is $5.25. So, if you have $25,000 that you want to invest in silver and you want the lowest premium possible, which is generally what you always want, your best option is to go for the 100-ounce assorted silver bar. Why? Because it has the lowest premium. Now let's do some gold calculations. Let me just close my tabs. And let's pull up some gold bars. Awesome. So let's pull up the Royal Canadian Mint Gold bar. And again, the math is the exact same. So you're going to take the price, so 2914 minus spot price. And what we can see is that our premium is $194.56 above spot price. Now let's pull up a gold maple. And let's calculate the premium, so $29.29 minus spot price. So we can see that the premium on the gold maple is just slightly higher than the bar. So the premium on the gold maple is $209 versus $194 on the bar. Again, if you're looking purely for best investment value, you could go really with either one. In this case, I would go with the coin because when you go to sell coins, you're generally going to get a higher rate than if you go to sell a bar. So in this case, the coin is the better investment decision because really there's a $10 difference on the purchase price. And when you go to sell, you're going to make that back up. Now, to prove that fractional coins like a 1/4 ounce gold maple, they do have a higher premium, let's take a look at a 1/4 ounce 2023 gold maple. So what we're going to do in this case, we're going to take the price and instead of dividing by a number, because it's a fractional, we're going to multiply it. So in this case, we're going to multiply it by 4 to get us the price per ounce. So we can see right now that the premium per ounce is $3,198. And if we subtract it by spot, that gets us $478. So going back to the bar at 194, the 1 ounce coin at 209, the 1/4 ounce fractional is at $478 an ounce over spot. So before you even break even on your investment, gold has to go up about $478. Now, let's divide that by spot price, and we're going to get a premium in a percentage. So that gives us 17%. So again, to really kind of nail this point home, for you to break even buying this quarter-ounce gold maple at this price right now, gold is going to have to go up about 17.6%. So it doesn't necessarily mean this is a bad product. Again, if you don't have the budget to purchase a full ounce, this is a perfect product. It's simply, the smaller in coin you go, the higher the premium it's going to be. And we can do one more example with the 1/10 ounce, 1/10 of an ounce gold maple. So let's take the price at $336.92 and multiply it by 10 this time, because it's 1/10 of an ounce. So on a per ounce basis, we're paying $3,369, minus that by spot, and now we're paying basically $650 above spot price, which is crazy. And to get it in a percentage means we're paying 23.86, let's just say 24%. So the premium right now is 24% above spot price. So again, for you to break even on this purchase, gold is going to have to go up 24%. Now, this doesn't mean at all that the dealer is charging way too high for this product. Just know when they go to buy this from the wholesaler, they're going to pay a very high rate from the get-go. So don't feel like, or don't even think that they're paying around spot price when they go to buy this. They're paying well above spot price. Buying fractional gold coins is not cheap for a dealer. Now, let's take a look. So if you are on a budget and you do want to buy some gold, I highly recommend that you look at the gram gold bars. Specifically, like a 10-gram gold bar or a 5-gram, you're going to see a much lower premium. Now, the math on this is a little more complex, but what you want to do, again, you want to kind of find the inverse of the troy ounce weight. So to do that, you're going to take 10 and you're going to divide it by 31.103, and then you're going to take the inverse. So the math is a little complicated. It's not really worth the time explaining in this video, but you can always leave a comment and I can help you out with the math down below. And then you're going to multiply it by the product price. So we're going to get about $3,056 per ounce, which is $336 above spot. And on a percentage, we get about 12%, so 12.5%. So this has about 0.3 ounces, so a little more than the quarter-ounce gold maple, but we can see that the premium is much less. So the premium on the 10-gram Valcombi is only 12.5%, and on the quarter-ounce gold maple, let's see if I can remember, I have a terrible memory, it was about 17.6%. So in this case, if you are on a budget, you can't buy that full ounce, which is absolutely fine. Lots of people can't. In this case, I would go with the gram gold bars, and that's going to be like the 10-gram Valcombi, the 5-gram, the 20-gram if you're almost at an ounce. Those are going to be your best investment values. And again, knowing how to calculate product premiums will allow you to look at these different products and really make the best and most informed investment decision by taking one product and comparing that product's premium to another product. And really, you always want to buy products at a low premium. Thanks so much for watching, guys. That wraps up today's video. If you found this insightful, if you learned anything, please make sure to leave a like, a comment, or to subscribe. Again, if you need help with the math or if anything was unclear, please make sure to leave a comment and I'll make sure to leave a reply. Thank you so much for watching. Happy investing.